This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. And just to give you a little background, I have been providing stock research and consulting since 1990 to institutional investors, and just recently started to provide that research to individual investors as well over the last few years. What I'm going to do, and what I do on each Friday, is do a video on the stock market, tend to focus on the S&P, but I will look at other things from time to time. I like to go through the market conditions to get an idea of what kind of environment do we really have? Is it a good environment where we want to be stepping on the accelerator, or is it the type environment where you want to be a little bit more on the defensive side and being a lot more selective? So we've been favoring the latter. Let's just see if things are changing or not. I also want to mention on Tuesday morning, I do have a video as well for this channel that is information based on technical analysis that is just giving a lot of insights into different indicators in multiple time frames. I look at MACD, I look at ADX, I use a moving average combination, and I use them in multiple time frames. So if you're interested, go ahead and subscribe, and you can get the videos on Tuesdays and Fridays. So let's go ahead and get into this. I want to start actually with the conditions in place. Let's look at this. I put together this little spreadsheet because I thought it would be easier to follow if we look at what's taken place. I'm going to start from the bottom here. We've got sentiment, and I use the Investors Intelligence sentiment numbers, the bulls minus the bears, the percentages. So there's 27% more bulls than bears right now. It's really not that bearish, meaning it's not at a point where it's excessive yet, but we're getting up into that area where it could be like a trading peak. This is the number of bulls for the week. And so when there's 51% bulls, you can kind of, once we start getting up towards the mid 50s, you can start to think that we're going to make a trading top. So we're getting close. It's starting to get into that dangerous area for a trader. And I'm going to go into the reasons why I don't think I'd be really looking to put anything on. If I'm looking to trade, I don't know that I'd be looking to put anything on right now until we get a little bit better pullback potentially. The other thing that you'd want to look at is the RS overbought oversold oscillator is my RSI 5 on the weekly S&P over here, and it isn't overbought, but it's in that, it's getting close. It's at 66. I hit 65. It's close enough. We didn't actually get oversold here. We didn't get oversold here. We did get overbought here. We missed it there, right? We're looking for periods where we get overbought or oversold, and the sentiment number is in agreement with that. So if we're oversold, we're going to be in a positive mode. If we're overbought, we're going to be in a negative mode. All right, and then let's look at the volatility. All right, and I'm going to start with the daily chart. So what the average, basically this red line is the daily average true range of the S&P. And when that is declining, and it's declining below its 18 MA, which is this blue line is an 18 MA of the average true range, then we're in a pretty lower risk environment, lower volatility environment, which you don't tend to see big horrible moves to the downside when that's in place. So from that standpoint, I view that as a positive. Now, if you look at what's going on the weekly as well, this has been in the same position since back here. The bias is up based on these two indicators. We don't have the amount of volatility in place in either one of these time frames that to suggest that there's a significant amount of distribution going on or this thing's really ready to roll over. So you have to keep that in the back of your mind. And when I combine the overbought condition and the fact that we're starting to get into a position where people are getting a little too bullish, with this volatility indicator being positive, I'm leaning more towards it being looking for a pullback to be a buyer rather than looking for this to fall apart. Now, it could fall apart. I'm going to go into both the bullish case and the bearish case when I get into the trend and momentum. I'm going to switch charts and have 4 different time frames up. But if we just look at this to start, we do have a positive weekly weekly and daily trend in place right now. The monthly is still stuck in neutral, caught between the 18-month and the 40-month. There isn't really a strong momentum case in any of the time frames right now. We can't really say, wow, this looks really good based on the momentum characteristics. It just doesn't have, the market doesn't have that. It's not in that mode right now. We don't look that strong when you look at it in any of these time frames. So let's go ahead and get into that. And we'll start with the monthly very briefly. Look at what's happening again. Now, again, we hit the 18-month here, and we hit the 18-month. We got pretty strong reactions when we hit it the last time. This time, we've got about 7, 8, 9 days left to the month. That were trading days to the month. We haven't really shown much of a reaction after hitting this line. So if we get this really tiny bar like this and we finish the month like that without moving, you have to be ready for a move in one direction or the other. Either it's going to fail at this 18-month and probably head all the way back down to this low, or we're going to finally get some kind of a breakthrough this line, and then we could push higher up towards 4,500 in the S&P. So that's kind of what we're watching here on this monthly chart, but we just can't seem to punch through this line. Now, look at what's going on, and I've been highlighting this on the weekly, and I just kept these trend lines in place. So we broke the downtrend line that everyone had been watching back here in February, and then we came back and tested the 3,800 level of support. And I'm using the S&P numbers. I think it's easier to track when you're looking at it from S&P standpoint. So 3,800 is key support. We came down and kind of tested that. And I would consider that a test of this low after breaking the trend line. So breaking the trend line is the 1 in a 1, 2, 3 change in trend. This is the 2. And then 3 would be taking out this prior peak. If we can do that, then we have confirmation that there's a pretty high probability that the trend wants to work higher. And again, I'm leaning more towards that being up towards this kind of like, on the S&P, it's around 4,500, something like that, where that next resistance zone would be. Now, what's missing in this equation right now is the momentum. The MACD is crossed above 0. It did hold the signal line, but it just doesn't look that powerful to me. And green DI, which shows the strength of the buyers, is actually making a pretty good lower high here relative to this peak. So these are almost like this is almost like a double top in price, and we're making a lower high in the green DI. So I think we're going to need to see some follow through and some better action in green DI. If this thing really wants to push higher, we could end up, if we don't get confirmation here, we could end up getting one of these situations where it looks like it's breaking out, and maybe by week's end, it just kind of gives it up. So I think what we need to do is focus a little bit more on the daily right now. And my reasoning is that the momentum is going to start on the smaller time frames. We're going to get stronger momentum on the daily ADX first, and then that'll spill over to the weekly. Look at what's happened here as we climb up to and test this key resistance area. Look at what this has done. It ran up, it pulled back, it made a higher high, and look at what green DI did. It ran up, it pulled back, and it kept pulling back. It never actually made a higher high. So this is a DI divergence. It's not as important as a ADX divergence in my opinion, but just the fact that the ADX is low and we've been moving up and it can't seem to get itself going, and now we're getting divergence in this, we should probably expect another test of support down here. So on the spider, it's around 405, 406, something like that. I think we want to drop down a little bit lower towards that next support zone. Now, when we look at the bar, it's not really that ugly of a bar. The volume, it's actually opened above where it closed, so the volume shows a green bar, but this is pretty light. We've got light volume taking place right now, but we do make a pivot high. We did make a pivot high here after moving up to a new high, and this made a pivot low. So this made a lower pivot high. So we do officially have divergence in place in the DI line. I think that increases the likelihood we want to come back and test this a little bit more, but we do want to watch and see how this handles this 18 MA, because sometimes the DI divergence just pulls it back to the 18 MA. Now, the way we can evaluate this pullback here is to watch what's going on the ADX on the hourly chart. So right now, this hourly is not really showing a lot of strength in the sell-off. We did get a gap down. We rallied back up and filled that gap and then had follow through to the downside. But right now, all we've done is pull back to the zero line on the hourly chart, MACD, and we just have red DI. It did make a higher high. So the likelihood is this is going to take a little bit more time. It's probably just not going to turn on a dime based on this. But if ADX stays low during this phase, then we don't have a really strong decline going on. If ADX kicks in based on the sellers, red moves up and this climbs above, the blue line climbs above 25, and both of these lines cross below zero, then you have to start thinking that we're going to get something a little bit deeper than just a pullback to the 18-day. So you want to use these two time frames together. In fact, you want to use all these time frames together. If we fail here at the 18 and look like we're rolling over, then the likelihood is we're coming back down towards this 398, 399 level where the 18 week is. Okay, if we break the 18-day, the target for me would be closer to the 18 week. That's how I would be thinking about this, especially with the fact that we don't have real strong momentum. Now, if this is going to fall apart, and so let's look at the bear case now. So I've given you the downtrend line break and the test, and then we move up, and if we take out that high. Now, I've kind of gone through all the scenarios there, but look at what's actually happened during the process of creating the 1, 2, 3 to the upside. We actually created a trend line and a break of it, and now we're testing the high. If we fail here and start to sell off and break below this prior low, now we have an increased likelihood we're going to test this level down here. So right now we're in this really odd position where we have a 1-2 and a 1-2. We have a 1-2 to the upside developing and a 1-2 to the downside developing. We don't have clear conviction in anything. Certainly not when it comes to the ADX. It's a low ADX condition. We could be prepared for anything when that happens. I don't like the fact that this is up 5 weeks in a row and we don't really have strong momentum in place. So probably ought to be looking for some kind of a pullback and see if it garners any strength. If there's a strong decline, we get a big red bar off of this peak, then you got to start thinking that this low is going to be in jeopardy. So I don't know. I mean, all we can do right now is evaluate every new bar that comes on a daily chart, every new bar that comes on the weekly chart, and make our decisions from there. Can we hold the 18-day? That's the first order of business. If we're going to hold it, then this ADX is going to stay low and this MACD is going to hang around the zero line. So that's the process you got to go through. Right now, I wouldn't be in a big hurry to probably be buying based on the fact that we're a little bit overbought on that weekly RSI and we're up against this resistance zone with divergence. All right, that's the update for the week. Go ahead and let me know if you have any questions. Thanks.